What's up, guys? It's David here today with Real Estate Investment Trust REITs. I want to talk to you about what they are, what they mean, and how important they should play a role whenever it comes to your investing strategy. And furthermore, I'm going to let you know what it is. More like the definition as it's read here. What is an investment trust, a REIT? A real estate investment trust REIT is a company that owns, operates, finances, income generating real estate modeled after mutual funds. REITs pool in a capital of numerous investors makes this possible for individual investors to earn dividends from real estate investments without having to buy, manage, finance, or any properties themselves. That's that's pretty much what a REIT is. So real estate investment trust. Why did I buy that that trust? Well, price point. The price point per share and the price point for the dividend is quite nice. Um, it's sitting at $14.66. Ticker symbol RE-UN.to, which is Toronto Stock Exchange. Um, um, Whenever I look at them, I look through Yahoo Finance, and I also have like a stock watch list through Apple stocks. I find that you're able to see like you can put your finger on both up and down, and you can get like more specifically on a certain day, certain month, what a stock was down from really quickly versus, by placing your finger on the lowest part of the chart to the highest part of the chart on Apple stocks. And I just find it a quick reference versus the charts that you'd get on Yahoo Finance. Not to say that the Yahoo Finance charts aren't a great source for information. Uh, they're The Yahoo Finance charts are really great for, you can customize them to show like stock splits, uh, dividend payout dates. Um, so all of those really great things to pay attention to, that you want to see when companies took like a break on paying their shares out, like Slash did cut their dividends. Um, so even with this company, I can see that on get a little bit of a close up. You can see that, and if you look more closely, you'll see a spot up here says details. You scroll through, and you can actually like see more specifically what they're talking about. So they do analysis and all of that. So it's showing a 2.2 for buy. Yeah. I'm not very good. This is like my first video, so I have to figure out how to like get my phone onto the screen and stuff, and so that I can better explain these things. But I just wanted you guys to see kind of how it looks from what I'm reading from and stuff. Like, this is a very, I'd say, noob investor kind of channel. Somebody like me I've been doing this myself for about 7 or 8 years now. I'm very proud of the size of my portfolio. The size of my portfolio is about 60,000 right now. So I'm able to, with that 60, get a pretty great return. Lately, it's been taking a bit of a, not like it's still doing well. It's still returning quite well. It's about 4,000 a year, but all my stocks are at the like higher risks, right? So restaurant stocks, um, some are really great ones, some are banks. I have like oil and gas ones, REITs. I have a whole bunch of them, but I want to do a video just basically explaining why I felt I picked some of the stocks that I picked on a more individual basis. And then once I'm done explaining all of my stocks, I'll give you guys updates on how many more I bought of which stock as I reinvest those dividends. But yeah, so um, basically Rio Can for me was um, a purchase based on just like driving around and noticing Rio Can where the Canadian Tire was and where the A&W was, and seeing that it was managed by Rio Can. So I wanted to learn more about Rio Can, and I felt like Canadian Tire, A&W, Mark's, Work Warehouse, and probably many, many more well-known companies sit on these guys' property management, land and stuff. Um, so whenever I take a look under Yahoo Finance, their description of themselves is RioCan's one of Canada's largest real estate investment trusts. RioCan owns, manages, and develops retail-focused, increasingly mixed properties located in prime, high-density, transit-oriented areas Canadians want to shop, live, work. As at March 31st, 2020, our portfolio is comprised of 222 properties with the aggregate net leasable area of approximately 38.6 square feet at RioCan's investment, including office, residential, and rental, and 16 development properties. So RioCan's showing 605 full-time employees. They are on Yonge and Elton Center, Suite 500, 2300 Yonge Street, P.O. Box. It's in Toronto. Seems like they give up their phone number here, so I'm sure that you could call them from anything to learn about how to get a job with them, from anything to find out, maybe get their investment person on the phone and see what they could say or what they could tell you about maybe some of their new acquisitions, what their future plans might be to game plan growing their company, their business. And sometimes as a new investor, it would be super insightful for you to just to make those calls, and then you get a general sense of what it is to be an investor, and you learn a lot just by phoning them or reading about them on Yahoo Finance, but you're probably going to get more info by actually just talking to a few people on the phone and writing it down. Write it down, see what they're saying, how they're coming across, what they're willing to tell you versus what they're not willing to tell you, and what people are saying online and what people aren't saying online, right? So when the company shares something, they know full well that they're going to be scrutinized for anything that they give up, so they will be careful. Some companies are more open and honest than others. There's a lot that have internal workings or acquisitions why they wouldn't want to tell the rest of the world why they might be thinking about buying some other company. But I like REITs. REITs is land. REITs is real estate. Real estate is one of the greatest or the greatest wealth builders that I know of in our time. Second to that is owning like a business, or maybe a business is first and then real estate, depending on the business. But then after that, you don't want inflation to suck up your money that's sitting in your bank account. So you go to the stock market and you can do dividends, which is a really sweet deal. Dividends are not as scary, and the stock market isn't as scary as anybody and everybody should think it is, especially if you like read the details of a company's debt, balance sheet, fundamentals, whatever you want to call it in your own terms. Yahoo Finance provides all that, and they have an app for iPhone, and I'm sure I only have the iPhone, but I'm sure they do have for Android as well. I've had it on the stocks and Yahoo Finance on the iPad. I don't find it the stocks, Apple stocks, for the iPad to be as friendly, user friendly as iPhone. But yeah, um, but they got really cool stats. Like it shows like the holders, um, so the people's names to which um, had bought shares and how many more recently shares were purchased. And some of these share purchases they're insane. They're like tens of thousands of shares, which only you and I could ever like dream of buying like almost 60,000 shares at a time on March 9th, 2020 by John Ballantine. It, it's crazy, but it's cool. It's cool to know that purchases are being made like that. It doesn't say that Mr. Ballantine is like the CEO or anything. Uh, he could be. Sometimes it'll say that it's the CEO, so sometimes they'll buy some of their own company. Sometimes it'll be because they're doing share buybacks, but they're doing it through themselves, for their company on the behalf of the company. And however they would do that in their taxes, I'm not entirely certain, but I am trying to learn like Canadian taxes so that I can better understand my own investments, um, and other people, and to help other people as well. But they got the show insider roster. Um, oh yeah, there we go. Ballantine John, senior officer of issuer. Okay, so he bought almost 60,000 shares. Um, so a whole bunch of insiders buy, and that will increase the share price. Uh, you know what I mean? Because the more that are selling, the more. And so they take their profits. They can take their profits and resync that back into the business. And hopefully it's not just um, a bad thing would be if it was just the company insiders buying and nobody else. Like say if the retail market was only buying Rio Can, like 10,000 shares in total across the board. But you know what I mean? It wouldn't be that great, but hopefully you would want to look at also the the share float. You know what I mean? Uh, if you really wanted to get technical, you look at the share float and you would look at what they're buying and how much after that. If it showed you those dates, which it did show you the dates of the holders, um, that you could minus those shares that they bought, go down to everybody that bought them by the date. It shows you the percentage of shares held by all insiders is 0.28%, 34.86% shares held by institutions, 34.96% of float held by institutions. Number of institutions holding shares, 225. So it's significant. Let's look into their actual historical data. So their historical data shows that they're a monthly paying dividend. They pay on Yahoo Finance. Their most current dividend payout was June 29th for 12 cents. Now that's annually, it's $1.44, I believe I saw. $1.44 or 9.6% yield. Um, so yeah, their average volume over 3 months is 21.36. Their volume as for really more currently is 1.51 million. Their market cap is 4.66 billion. So earnings per share trailing 12 month is $2.19. Their PE ratio trailing 12 month is 6.69. So 1 year target estimate is 2136. We also want to look at like debt and stuff like that. We want to see like what they're carrying. Now, my portfolio isn't like, it's big, but it's not like terribly big to what you would see to other YouTubers and stuff like that. The other YouTubers, I'm sure, are like one YouTuber that I follow quite closely is Financial Education. I really like his stuff. It's American, but there are a few Canadian YouTubers that I follow as well. But I find he's like really insightful with how how to invest and how to look at what's coming around the corner for certain companies, and he's very good at explaining. So if you guys feel like he's a worthy cause, you might even already be a subscriber of him. But definitely check Jeremy out. He's very, very talented at what he does, and I have a lot of respect for Jeremy, as well as the rest of the investing YouTuber community and subscribers interested in making their investments and their future brighter for them and their families. Um, it's very fun and exciting and liberating feeling knowing that at one point in somebody's life, after taking such a long journey, such as dividend investing, that they'll be able to sit back in on a beach chair and an Adirondack chair, Airbnb being a cottage somewhere with their family, and going, not only do I have this, but I'm going to like be able to hand this off to my family after I pass away, and it continue to grow. And I would definitely like teach my family how to do this themselves on top of anything and everything else. So you can just imagine over time the nest egg that just one generation of life can, one person in this, the market is more bullish for longer than it is more bearish over a great span of time, like 10 years, like 20 years, like 30 years. You imagine what the payback would be if you really just held for 30 years and you were, say, making, I don't know, like I'm making about, on average, about 300, or sometimes, I'm about $350 a month, monthly coming in on average. But that would grow significantly, just reinvesting just that every month. You know what I mean? If in more aggressive, more high risk uh, dividend payout ones, such as Rio Can, is 14, $15 a share. It's 9.6%, $1.44 back annually. You divide that. It's like I believe I said 12 cents a month. Uh, but that's the fun part, and I do it through TD. It's super, super awesome. I love TD's app. The Not only that, but they project like your earnings, so it's super easy to like break down and look how your investment's going, what it's actually doing. If you keep a very close eye, the one thing I would guess I would like to see on the app that would be like nice would be to make it easier so that you didn't have to always write it down and always keep track. But what I do sometimes just to make it a little easier is I'll create just a TD album, and I'll screenshot my my holdings to see each holding, right? Just to make sure, oh, which one cut their dividend or slashed their dividend on me, and then I can re-evaluate at the end of the month, or re-evaluate at the end of the year, or quarterly to say, hey, should I take some money away from that company and put it into one that's treated their shareholders better, that better payouts, better yields, better everything, right? But usually, even if a company um, cut their dividend, and I can like read about it and like understand why, if it's nothing more than, oh, it's because of the pandemic, and I know in the long term it's all going to come back to square one, then I'll hold it, because ultimately it wasn't this, each position that I hold is only like maybe a few thousand each here and there, and it's not, like I said, not a massive portfolio, but like Rio Can, um, they've been paying this whole time. Uh, I hold a few other ones uh, that had in the oil sector, in the restaurant sector, that have cut their dividends quite significantly. Uh, like I would say like 60, 70% of their dividend that was previously paid out, they've cut, which is sad, very, very sad, but understandable, and surprising enough that they've kept the dividend payout to like whatever it is now, like 30, 40% or less. Um, it's surprising. So that they've been strong enough, you know what I mean? Because they could just go, you know what, we'll reduce it to like nothing, a complete cut, and in like people that have invested for like more than 5 years, 10 years, know that the company probably will bring it back, because they realize at the end of the day why people are investing in them, and it's because they're getting something from that company. They're getting an income passively, right? So these are why we do it. There's so many ways to make money on the market. I believe dividend investing is the safest. Um, Now, my dividend stocks aren't the safest. They're not like an Amazon, um, I don't know, Apple. They're not a 3M. Um, you know what I mean? Like some Johnson and Johnson. Like they're not like that. Am I gonna go for the Johnson Johnson 3Ms someday? Coca-Cola, McDonald's someday? Yeah, but right now I'm youngish enough to realize that for me to dive into the more expensive ones, in my opinion, would just hinder my annual growth and my annual. I'm okay with a dividend being cut 70% right now. I know it's going to come back. Like my one restaurant brand said that it was going to come back in like 6 months. I know that it's not going to come back to where the dividend was paying out, but they're going to start looking back and having those conversations on the board saying, hey, we need to do something for our shareholders here. Uh, you know, are people sitting inside restaurants again? Um, you know, and so on and so forth. But Rio Can, I like it. I don't think they're going anywhere. Um, Canadian Tire, A&W, Marks, they're all solid stores that people trust a lot. And I'm sure Rio Can has more extremely A-class proper franchises that are sitting on their properties that are managed by them. Um, I honestly don't see Rio Can going anywhere, and because of my large amount of confidence in that, and me knowing that, and then knowing they've been around for a long time. Just taking a quick peek here. Viewing company profile. Like their CEO, Mr. Edward Sunshine. that, that's a funny name. BALLB, CEO and trustee. Um, well, he's making good money too, over 3 million. Um, so his year that he was born is 1947. I'm trying to look for the year Rio Can was established, um, or established on the market. It's they don't really say it. I'd have to go, like, Google that. But okay, so I like going like to the charts on Yahoo Finance, and basically um, I will go. I'm gonna go right now. Sorry, guys. So I'll tip it on its side on the phone like that, and I will put it like this. So whenever I take a bit of a closer look at it, there's events. So if you go to events, the little bolt, thunderbolt, you can see that I have highlighted dividends, and you can also highlight stock splits, corporate guidance, and performance as well. So I'm just going to do dividends and stuff like that. Yep, so there's your dividends. They pop up. All the D's are dividends. If you saw like an S, that would be a split, but currently I don't see, uh, see, that's max chart, so 10 or more years, right? So from 1998, so I guess they were on the market. It's showing 1996, 05, 26 was when they're showed first to be on the market. So that's quite some time. That's quite some time. So you can go to a year, and it shows you all the months there. You can go to the beginning D, and it will show you that the date was 07/30/2019 for 12 cents. This is Yahoo Finance. It gives you great perspective, and shows you to break it down. So I go to 2 year, and so during that downtime, which was pretty crazy, you can see that there's still dividends being paid. Still being paid. You can just scan through. You click away. I find it very nice to be able to go through that chart, and just look at it like that. But that's the full chart, max chart. Sorry, guys. I would put the phone on my screen, like integrate it, but I just don't know how at this point, because I'm just getting started here on YouTube. But yeah, and sorry for it being such a long video, but I do like to talk, so excuse that part. But yeah, so rioCan, I find that, like, let's take like an example. They're 1471. So get out my calculator, or you guys can get out your calculator. Uh, I just do it like this. If I have, say, 300 from my dividends being paid every month, or whatever, 350, and I take some of my pay, and I match my dividends, say, for another 350. So that's 7. So 700 divided by 14, what did I say? 71. 1471. That's 47.58 shares. Now TD it's not free, right? So it's like a $9.99 chart, $10, right? So $10. So I'll usually deduct one share off of whatever I figure out on the calculator. 47.58 shares from 700 at 1471 share. So I'll usually just go for 46 shares, right? Because they're $15, so it's only $10. So 46 shares. 46 shares, 46. So 46 times $1.44 payout, right? So that would be a year, that would be 66.24 a year. But then you take that 66.24 and you divide it by 12, because they pay out 12 times a year, and it turns out to be $5.52 on top of, like, say, if you already own some RioCan. So that 66, say, for me, I own very little RioCan. I own 130 shares right now. I used to own 95, but my last month I got like 300 and some or whatever, and I matched it, and it was like a little over 500, and I got, yeah, I got 130 down from 195, so whatever that is, 95, that was 35 shares I got. So 35 shares is what I actually have, times $1.44 was $50.40. So I had like $11.40 whatever cents. I'm up to like $15.40 a month from rioCan paying me. So if I go $15.40 times 12, right now rioCan's paying me about $184.80 a year, or like $15.40 a month, which is cool. It's cool. It's a cool little thing. You do these little things, it gives you something to do. It's very inspiring for your future. This is how I understand dividend investing. It might not be the most accurate, the most right way to do it. I might not be looking as deep as some of these other YouTubers at the moment. It doesn't mean that I'm not going to be more fundamental analysis in the future and more in depth. I'll be way more in depth in the future, just like some of these other YouTubers. But am I going to hold to my roots? Yes. So I'll have super complicated videos versus just my more normal starting, talking about anything, talking about kind of like how I really feel, kind of like a vlog-based investing videos, how I'm feeling about my day and investing. Sometimes it's fun just to talk, and then later on I'd like to build like a cold ice cap or a cold ice brew coffee club, or coffee club, of a small select amount of people that are on the same wavelength for in this kind of investing on dividends. It makes for a fun little outing here and there. And I think that anything that pushes people further into their retirement in a positive manner is exactly what we all need. Um, and I think that I can get that kind of a club going. Anyway, sorry for being like 35-minute long video, but I kind of wanted you guys to get a feel for who I am and how I think. It's very important that you guys drop like comments. Tell me what I suck at. Tell me, just, I don't know, get a haircut, get a COVID haircut. I don't know, just comment, do anything. Haters, trollers, whatever. I'm all good with it. Anyway, I'll be back on in probably about a week with another video, which would probably be shorter. Maybe. I don't know. We're going to see what my timelines are. It'll probably be 10-minute videos. I hear 10 minutes is the length of video that YouTube likes. But please, 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 I'm starting out. I need a confidence boost. If you guys want to leave me a link or to your videos that I can check out and like and subscribe to. I'd really like that. Even if it's trying to teach me something that I don't know, I'm a sponge and I'll suck it up. And thank you. Give me a thumbs up and a like. And please reach out to me too. Thanks.